It's December 19th, JLD here, and welcome to MSTR Today and the Treasury Titans. Michael Saylor is back to work. I am back to work. Are you back to work? I know the Bitcoin's kind of back to work. I mean, we dropped to like 84K yesterday. We're already back up over 88,000. Who knows what the day will bring? But man, if you're not ready for a little 3K up, 3K down, 4K up, 4K down roller coaster, then you were not built for this. But guess what? Michael Saylor is back to work. I'm back to work. Actually, I never left work, so here I am again. And I hope that you are looking forward to the upcoming holidays because we are locked in. Strategy's locked in. Saylor's locked in. Fong is locked in. John is locked in. Let's go. Oh, who else is locked in? How about Natalie? This was a great post by Natalie. I absolutely loved it. She wrote, "Guess the bank." Little ode to Michael Saylor's trips to JP Morgan and Morgan Stanley. Guess the bank. And guess what? Natalie is at Strategy. She is at the headquarters of what will one day be the most powerful and valuable company in the world. Good stuff, Natalie. Love seeing you rock the rock. Here we go. The Bitcoin therapist says another reason Bitcoin should be above $250,000. Debt collapse. Just in. The crypto czar, David Sachs, says the U.S. is closer than ever to passing the Clarity Act, a landmark crypto market structure legislation expected to pass in January. Let's go. January would be a great month to pass this act for sure. Moving right along, Adam has a report on S&P Global affirmed Strategy's B- rating. So there's some information on this. You know, some of us were hoping there was a chance they were going to upgrade it with the $1.4 billion USD reserves and just Strategy showing the ability to raise capital even in a crabby market, but it didn't happen. So what is the reality? Well, the S&P 500 is the S&P is using a ruler to measure a black hole. Unfortunately, that's the game that must be played. S&P did note the establishment of the USD reserve mitigates liquidity risk, but are now noting they have a limited track record of managing that reserve. So, you know, they want to see Strategy actually manage that reserve probably for 6 to 12 months, probably 12 months. The company has not provided complete clarity as to when it would operate with reserves at the lower versus the upper end of that range. That seems like a rather easy problem to solve for Saylor and Company. There are three criteria they're giving for a credit rating upgrade over the next 12 months. It seems to be easily achievable. One, we expect the company to consistently maintain U.S. liquidity of meaningfully higher than 12 months of preferred dividend and coupon payments. And they're already doing that. They're probably going to bump it to between 2 and 3 years. Number two, Strategy reduces its use of convertible debts. Literally the current plan. Saylor is absolutely full steam ahead of reducing and then eliminating convertible debts. Three, the company continues to demonstrate strong access to capital markets even during a Bitcoin stress. So obviously, they are still raising billions after a 33% Bitcoin drawdown. So feel free to read the report, but I can give you a much quicker version. The company accumulated $72 million of assets per day for 2 straight years with zero operational overhead, but cash flows. So again, too long, didn't read. Adam did a much better job with his explanation. And Adam does follow up by saying, this is S&P using a ruler to measure a gravity well. The rating will lag reality, then snap upward once it becomes undeniable. Strategy accumulated roughly $72 million of assets per day for 2 straight years. Let's just say that one more time. Strategy accumulated roughly $72 million of assets per day for 2 straight years with negligible operating complexity, but cash flows, right? Come on, guys. Strategy Maxi says 99% of people want stretch. It's true. 1% want MSTR. That's you. That's me. Then it will be 99% kicking their butts for not buying MSTR 10 years later. And that's true. And this is in response to Kraken offering new to X stocks, which is stretch, which is, again, what people want. And as MSTR shareholders, we want this too. Why? Because now it's going to even get to 100 quicker. It's going to stay at 100 for longer periods of time. And Michael Saylor can ATM his face off even more with more inflows of capital. Metaplanet to the USA. Let's go. Great video by Adam talking about how Metaplanet is now going to be trading under a new ticker symbol as well within the United States. It's going to be just bringing more liquidity, more flows of capital, easier access to individuals. So another great step for MetaPlanet, a company that I am very bullish on and have a big stake in. Not nearly as big as MSTR, but big nonetheless. Chris says, those that claim you should have sold your MSTR shares in 2024 at 400 would probably have told you to sell your Amazon shares in 2002 at $1. The game is not for them. And here's the voice of the people that would have said, you should sell your Amazon shares for $1 because they don't make any money. They don't have any plans on making any money. They're not a profitable company. The internet is a fad. It's going away. So that's what they would have told you back in 2002 to sell your Amazon shares for $1. And now, obviously, Amazon shares are worth a little bit more than $1. I haven't checked the exact dollar amount, but they're worth more than $1 now. And the people up with the MSTR shares in 2024, you should have sold for $400 because it went down to $155. You could have bought it at $155. And it's probably going to go lower than $155 because Michael Saylor is a con artist. He's running a Ponzi scheme. He doesn't have any real business. He doesn't really know what he's doing. And I think I know everything that I'm talking about because I've done zero work with Bitcoin or strategy at all. So that's what those individuals sound like 22 years later. Actually, now 23 years later, it being 2025. So listen, that's just the conversations that you could be having with people, or you can just ignore those people. Listen to MSTR Today and other great shows like Adam's Show and, MSTR True North and other great shows that are out there. It's your choice, totally your choice. But obviously, you're making the right decision because you're hearing my voice now. And we have a couple great video clips of Michael Saylor coming up. But before, I want to just kind of go through this grain of salt post, which is really cool. Stable coins can't pay yield natively without tripping Howey. So yield has to be bolted around the token. Stretch is different. You can buy Stretch directly and earn the full yield yourself. What Saylor is doing now is packaging it for bank distribution. The structure: banks hold Stretch plus a 10 to 30% cash buffer. Stretch pays 10 to 11%. Banks use 8% APR, monthly today, potentially daily. The 2.5 to 3% spread builds a liquidity pool to handle redemptions. No forced selling, no duration risk, just balance sheet liquidity. This is why Bitcoin equitization via Stretch will scale faster than yield stablecoins. Yield isn't promised by the tokens. Yield lives at the bank layer. Stretch becomes a bank distributed money market, not a security. And once your money market pays 8% per year, who needs a bond? Saylor, did I get this right? Well, he's about to tell you, so let's sit back, relax, and enjoy. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you. From what customers see to what they don't: legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD.
It's absolutely true. There's this meta in crypto Twitter and in the broader traditional media that MicroStrategy will be forced to sell its Bitcoin. And I think it's such simplistic thinking. The thinking is MicroStrategy has debt and it's used it to buy an interest that generates no cash flow. And eventually that doesn't work. Like, sure, that's true if you stretch it to infinity. But the thing about debt is you can actually look at it. And when you actually look at it, here's what you see. Every year, MicroStrategy has to pay $800 million in interest. It's sitting on $1.4 billion in cash. Therefore, it has plenty of cash for the next 18 months. Okay, that's literally invalid for as far as the market can discount. The second is it has $8 billion in debt against $60 billion in Bitcoin. For starters, that's not very much debt against a lot of Bitcoin. But then if you look at the actual debt, none of it comes due until 2027. And in 2027, $1 billion of debt comes due. It will have to either refinance or pay that down. But the idea that it's going to have to sell $60 billion of Bitcoin, there's just no world in which that's true unless Bitcoin falls 90%. And if Bitcoin falls 90%, we're not worried about MicroStrategy, right? We're all looking for other jobs. So I just think it's
Yeah.
it's from a data perspective, just strictly untrue that it will be forced to sell its Bitcoin. There's not a world in which that will happen.
People that are excited about stablecoins are focused upon payments technology. How do I move money at the speed of light, or how do I improve the Visa network or the MasterCard network or the traditional banking system using digital technology? The value proposition of Bitcoin is digital capital. It's someone that wants to store their value for the next 30 years. So if you think about it, you don't know of any billionaires that are going to sell everything they own to buy US dollars and put it in a safe. So you don't really have currency. Currency is the dollar competing with capital. Stable coins are digital currency. It's a different industry. Bitcoin is digital capital. Bitcoin is competing with gold. It's competing with real estate. It's competing with public equity, your Mag 7 stocks or your S&P index, or private equity. And people that have always owned those capital assets in the 20th century, and they're thinking they want to own digital capital. Stable coins, on the other hand, they're competing with traditional credit card networks or traditional banking networks, and they're offering people with digital payments technology all around the world. Ultimately, the big winner in the stablecoin movement is going to be the US dollar, because what it means is that every foreigner will be able to use dollars instead of using pesos, bolivars, rubles, CNY, euros, any African currency, the rand, etc. So the dollar is the winner. The US is the winner. And then the technologists that enable and host those digital dollars, are going to be successful companies.
So, and this is an observation we first got to. When we created Stretch, it was like a Bitcoin-backed T-bill, like a 1-month T-bill. And the idea was we modify the dividend rate to strip the maximum volatility off it. And it looks like right now we can probably get that instrument to somewhere between a 5 and a 10 vol. Like, it's probably going to move between 97 and 100 or 98 or 99 and 100, but we're never going to get it to 0 vol by ourselves at the credit layer. So, and we pay a monthly dividend. Well, the ideal thing would be we pass it through to a bank, First Bank of Abu Dhabi or Emirates Bank or Bank of Bahrain, or you could do it with Morgan Stanley or JP Morgan. You do it with any bank. And the bank strips the last 10 points or 5 points of volatility off it by putting a small currency reserve on top, and then you can draw down the reserve. If Stretch is trading 99, you just draw down 10% of a reserve. If it's trading 98, you draw down 20%. When it bounces back, you replenish the reserve. You take some of the dividends, you put them into the reserve, and you just keep this reserve buffer. It's like a shock absorber on a car. Like, how do you get a car to like roll smoothly over a bumpy road? You need some kind of shocks on it. So that's one thing that you do, but you need a partner to do it. You need the counterparty. You can't do it yourself. The other thing the bank does is you convert monthly dividends into daily, right? So you create a daily dividend stream. The third thing you do is you deal with liquidity fluctuations. So maybe you could make it 50% credit, 50% currency equivalents, or 80% credit, 20% currency equivalents, but you actively manage the currency layer. And by currency equivalents, I mean like 1 month treasury bills. You put that in. And so if you get hit with you get $1 billion fund and you get hit with $100 million of redemptions in a single day, you sell the currency, you don't sell the credit, because the currency is 1,000 times more liquid, 10,000 times more liquid than the credit is. So you sell the currency in order to avoid pushing the NAV up and down. And so the currency is a liquidity buffer, and then that reserve is the volatility buffer. And through active management, you convert a monthly to a daily thing. Then you put it on a platform, rebrand it, and then the last value added is get the regulator to approve the thing, to green light it, right? And so what I'm describing is digital money. If you can create it in the form of a coin, by the way. You can create a stable coin type instrument that pays 8%, but you would need a digital assets regulator to approve that. Imagine stable coins that paid 8% backed by Bitcoin, right? That would just eat the world. What's the second best? There is no second best.